Hello traders, and welcome back to Explain the Charts. Today is October 1st, 2025, and we are diving into a very timely and potentially volatile analysis of GBPUSD, or cable. We have major breaking news out of the US that will undoubtedly be the primary driver of market sentiment. So first we'll cover the fundamentals, and then we'll see how it all lines up with the technical picture on our charts. The biggest story is the confirmation that the U.S. government has officially entered a shutdown as of today, October 1st, after Congress failed to pass a budget. This event injects a massive dose of uncertainty into the markets, which is typically negative for the U.S. dollar. A key consequence of the shutdown is a potential data blackout, meaning crucial upcoming releases like non-farm payrolls could be delayed, leaving both the market and the Federal Reserve flying blind. Compounding the dollar's woes is the September ADP National Employment Report, which was just released and came in far worse than expected. The report showed the private sector shed 32,000 jobs, a stark contrast to the forecast of a 45,000 job gain. This represents the largest decline in 2.5 years and is a major red flag for the health of the U.S. labor market. To make matters worse, the previous month's number for August was also revised down from a small gain to an outright loss of 3,000 jobs. This string of terrible labor data has sent expectations for a Federal Reserve rate cut soaring. The CME FedWatch tool now indicates a staggering 97% probability of a rate cut this month, with a high chance of another one in December. In contrast, the UK economy has shown some resilience, with Q2 GDP growth accelerating to 1.4%, beating expectations. This creates a clear fundamental divergence, a weakening US economy likely forcing the Fed's hand towards easing, while the UK holds relatively steady. This entire macroeconomic picture is fundamentally bullish for GBPUSD. Now let's turn to the daily chart to see the technical landscape before this news broke. On the daily time frame, we can see a clear long-term uptrend that began at the start of the year. The price pushed to a multi-month high back in late June, reaching up towards the 1.3725 area, which stands as a major long-term resistance level. Following that peak, the pair entered a corrective phase, pulling back significantly through July and August. Let's zoom in on the price action from September to get a clearer view of the most recent developments. Here we can see the price slid sharply from a high of 1.3725 on September 5th down to a low of 1.3322 on September 25th. That 1.3322 level acted as strong support, halting the bearish momentum and sparking a recovery in the last week of the month. This rebound correlates perfectly with the emerging narrative of U.S. economic weakness that began to surface. Notice how the last few candles of September, particularly the final one on the 30th, are small and indecisive. This shows the market was pausing and consolidating, essentially holding its breath ahead of the fiscal deadline and today's crucial data. The market was coiling, building up energy for its next significant move. From this daily perspective, the critical support to watch is that recent low at 1.3322. Immediate resistance sits at the recent consolidation highs around 1.3467, with a more significant hurdle at the September 24th high of 1.3525. Now, to get a micro view of that end-of-month consolidation, let's switch to the 15-minute chart. Our hourly data feed seems to be unavailable for the most recent period, but the 15-minute chart gives us an excellent close-up of the action from September 26th through the close on the 30th. Here you can see the choppy, range-bound price action very clearly. The market was trapped in a well-defined range, generally oscillating between 1.3400 on the low end and about 1.3460 on the high end. This is classic behavior for a market awaiting a major catalyst. Large players are hesitant to commit to a direction amidst high uncertainty, leading to this sideways drift. The key takeaway here is that price is positioned in the middle of this range as we head into a new session, armed with overwhelmingly bearish news for the US dollar. A breakout from this tight consolidation is now highly probable. Let's switch back to the daily chart to put it all together and formulate our unbiased predictions. We have a fundamental backdrop that is strongly supportive of a higher GBPUSD and a technical picture showing a market that has found support and is coiled for a potential breakout. Therefore, the highest probability scenario, which I would place at around 75% likelihood, is a bullish continuation. We should be looking for a decisive break above the recent consolidation zone, specifically a move through the 1.3470 level. A strong, impulsive move on high volume would give this scenario much greater reinforcement. The first major upside target would be the September 24th high around 1.3525. If that level is cleared, it opens the door for a retest of the significant September 5th high at 1.3725 in the medium term. Now, for the lower probability bearish scenario, which I'd place at around 25% likelihood. Markets can sometimes react opposite to news in a sell-the-fact manner, though it seems unlikely given the severity of the data. The first warning sign for bulls would be a failure to break out, followed by a sustained break below the consolidation floor around 1.3400. This would suggest the news was already priced in or that other factors are at play. A definitive bearish confirmation would be a break below the critical support level at 1.3322. If 1.3322 fails to hold, the bullish thesis is invalidated, and we could see a slide towards the next major support zone around 1.3200. The likelihood of this bearish case would increase if there is a sudden, unexpected resolution to the U.S. government shutdown. So, to recap, the key levels to watch are critical. On the upside, watch for a break of resistance at 1.3470, then 1.3525, with a longer-term target of 1.3725. On the downside, keep an eye on immediate support at 1.3400, but the make-or-break level is the critical support at 1.3322. Given the powerful fundamental drivers, the path of least resistance appears to be to the upside, but as always, we must wait for the price action to confirm our thesis. Trade what you see, not what you think. That's our in-depth look at GBPUSD. Please remember that this is not financial advice and is for educational purposes only. Always conduct your own research and analysis before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next video.